large, over the whole period of the BRICS story, I think the Indian markets, and here to some extent I'd include the currency, have developed more of their own life. And people have looked, and certainly I have looked at India, broadly speaking, in its own right. And as you would know, a specific, unique part of that, because India's never been so exposed to international trade as many other countries. A lot of people think the Indian equity market in particular has got so-called defensive properties, because of India's economy being, in theory at least, more resilient to adverse global shocks. And of course, particularly since Modi appeared on the scene, what is it now? 3.5 years ago, is it? I think I think that gave a further premier to India, because people believed, and to some extent that has remained, that India's embarking on a better structural path. Of course, as you know way better than I do, Modi's government hasn't really delivered in a way that many investors hoped, but I think some of that belief about Modi is still there. So I think Indian equities in particular are treated a bit more independently than just being part of some emerging market mass. Um, on the currency, I think there is some evidence that it appears to get caught up in what's going on with many other so-called emerging market countries, which doesn't make a lot of sense to me, but it seems to trade that way.
Jim, does that mean that the EM risk correlation is broken down, and if the region is hit by a crisis, then India will be less impacted than others?
I think it does, yeah. But in that regard, I would also emphasize again something I touched on earlier, that a very important contrast to the Asian crisis. The rupee, to a large degree, is a floating currency, and for the rupee to decline, albeit by 9% recently, at a time where the dollar is rising against most currencies all over the world, I don't think should be regarded as a particular source of focus. What would be potentially more worrying for India if there was some kind of rigid fixed exchange rate, which typically, if it was like the past in many other countries, might have encouraged excessive borrowing in dollars, and at some point the Indian authorities couldn't support the pegged rate, and there had to be some devaluation. That would be much more concerning. And the fact that the rupee's fallen, when the dollar's also seen a significant rise against the RMB, never mind the euro and the yen, I don't think is a big deal. If you had a declining rupee and a declining stock market and evidence of problems in the Indian bond market, then there would be a case for having concerns. But I I I'd look at, as you just described, somewhere, all the collective performance of the Indian markets, and be pretty relaxed about what's going on.
Talking about India specifically, you think a large part of the investment attractiveness for India is, and especially India's growth story, is supportive macros or stable politics?
Oh, if I knew the answer to that, I would be speaking to you, or I am speaking to you from a very nice part of the world, but I would be speaking to you from my own Caribbean island that I would have bought if I was that if I was that clever. Um, uh, I think it's obviously a combination of each of those things. My own hunch, as I touched on when I mentioned about life since Modi, I think Modi has sort of retained a little bit of a sort of magical factor, which to some degree I'm not sure is entirely justified, but linked to it, in particular, the fact that India now regularly grows its GDP at a rate faster than China. I think that gives it a degree of attraction uh, as the strongest growing brick economy that otherwise wouldn't be there. So I think all those kind of things from the macro are certainly not unimportant. Um, and I think there is some constant awareness from investors that the potential for significant micro reform, take, for example, the never ending discussion of foreign direct investment, is always hanging over India, which makes people think that there is just such great potential out there. So I think it's a kind of combination of both. But what is interesting is that amongst a couple of the reforms that, of course, Modi did undertake the past 2 years, the monetary reform and the tax reform, both of which were broadly regarded as not being done very well, neither appeared to have a big negative impact on Indian markets. Um, that might be because as we got through time, maybe that initial perception of Modi's policy change turned out to be too pessimistic. But it might well be, and this is why it's important, that the Indian macro economy continue to grow between 7 and 8% anyhow. You know, the only way of really answering your question would be if we saw a period where India was growing by 10% or more, which I maintain still in theory could happen if Modi or any other leader of the country decided to more actively embrace structural reform, given the staggering demographics that India has.
Another aspect to this story is, how EMs are linked via their respective currencies. What do you make of the currency weakness in emerging markets, Asian currencies included? The rupee's fallen nearly 10% from a year-to-date perspective, but it has still more resilience given its domestic fundamentals, that it has made India stand out or look not as bad as some of the other regions. Do you feel that this weakness in the Indian rupee will be bought into, which will give India its due strength?
You know, I remember another interview we did a couple of years ago where I said to you I thought the rupee was a great buy, and it turned out to be within a couple of days the rupee started rallying, and I was my timing was very lucky. You know, I think in this particular case, uh, given the debate about what the Fed's going to do, it is a bit trickier. And if for some reason we saw signs that the inflation was accelerating in the US unexpectedly, and the Fed would have to raise by more than the markets have priced, then I think you'd see the rupee decline further, irrelevant of what was going on with India's deficit. Now, assuming that isn't the case, and given how the markets have reacted to the Fed chairman's speech in Jackson Hole, i.e., sort of like a dovish reaction, and very importantly, this is very much a personal view, I do not believe there is any chance of a Trump administration achieving its goals if the dollar keeps rising. I think the rupee, probably broadly speaking, is quite attractive from a valuation perspective. And I would guess 6 months from now, the dollar's going to be weaker almost across the board against virtually every currency other than those with very bad fundamentals. Because I don't think the US can preside over a rising dollar given the economic policy ambitions it has. And at some point, I think the dollar's trend will change.